Forbes India 30 Under 30, presented by Vivo.
Hi everyone, hope you're all having fun. So we've saved the best for the last. Today we have with us one of India's most successful startup founders. And in an era of the internet business boom, he was the OG, the pioneer in India, Sanjeev Bikhchandani, the founder and executive vice chairman of InfoEdge. In the course of his 30-year entrepreneurial journey, he has built a reputation as someone who has paved the way for Indian startups to come into their own, as a path maker and now an investor with insights and support, especially during the downturns. He will be joining us today to share his insights about becoming a successful startup and unicorn, and what do you do once you get there. Thank you, Mr. Bikhchandani, for being here. I'm sure this will be a very insightful conversation for all our young entrepreneurs and professionals. So, class of 2021, please send in your questions. We will address them towards the end of the session.
Thank you so much for inviting me, Nani.
Thank you, sir. So why don't we get started with the questions? You quit your job in 1990 to set up a business. Clearly, it was a huge risk. What gave you the strength to take this plunge? And how was starting up back then different as compared to what it is like today?
So I think I was actually mortally afraid. I was terrified. I'm from a middle class salaried background. My father was in the government. My mom's a homemaker. Nobody in the family was in business. So it took me a lot of time to sort of muster the courage. But look, if you want it badly enough, you will do it. And that's what happened to me. I wanted it badly enough, so I did it. In the beginning, I was really scared. I was paralyzed with fear. But after a couple of years of being an entrepreneur, I began to love the independence and the freedom. And so I got by. But, in those days, there was no venture capital. There were no role models. There was, very hard to come by, any kind of bank financing for a services business. So you essentially had to break even in order to survive if you didn't have any savings, which I did not. So I think it was fundamentally lack of capital, which constrained your opportunities, it sort of guided you, and you somehow got by. But, bootstrapping has its advantages. You learned how to do more with less. You learned how to make revenue. You thought very long and hard about risks. You thought long and hard about revenue models. And therefore, you came out with products and services that you knew would have a market. They would sell, where the customers would pay in advance. So I think you stretched a bit and you managed.
And 2021 saw the birth of about 42 unicorns. I think that's the highest ever for any year, particularly in India. Now, in your opinion, what is the key to becoming a successful startup? And is unicorn status synonymous with success?
So, look, I would advise young founders to take this unicorn business with a pinch of salt. Remember, the Fed has infused $4 to $5 trillion into the global economy since March 2020, ever since the pandemic started. And this influx of capital, this infusion of capital is unprecedented. Now, and this liquidity has traveled everywhere, including to India, private markets, public markets, perhaps not so much to China because China has fallen out of favor in the US. But this liquidity has meant asset price inflation everywhere, public markets and private markets. Now, without this liquidity, how many unicorns would there be? I don't know. But when I see the kind of galloping valuations, I would say take them with a pinch of salt. Focus on your customers, focus on revenue, focus on margins, focus on unit economics. Focus on the possibility that, at least keep in the back of your head that, look, what will happen if this liquidity dries up and money is no longer so freely or easily available? Will I still have a viable business? And if you stay disciplined and you keep your eye on the ball and understand your customers better, I think you'll be all right, whether or not capital is available.
In your opinion, in that case, how does one measure the success of a startup? Would it be valuation, scale, market share, profitability, or something completely different?
So it's like this. if you notice all the press, the media, what even Forbes prints, the only numbers being talked about are valuations. Nobody is talking about sales growth, revenue, margins, profit, EBITDA. Is it positive EBITDA, negative EBITDA? Is that going up? Is that going down? And that to me is problematic. If you focus on just one variable, which is valuations, uh, your business may or may not be healthy, but the valuations are going up, and that's of some concern to me.
And you've seen your share of crisis situation, over the last 3 decades. Be it, in the beginning, the start to, find funding, the dot-com crash, and more recently, even the COVID pandemic. What has given you the inspiration to keep going through it all? And what are the key learnings for you from each of these tough situations?
So I think what keeps you going are your customers and your colleagues, right? And to some extent, your shareholders. But basically, you work with people, you work for people, you work for your customers, you work with your teams, you work for your shareholders, your investors. And if you've got good people around you on all sides, I think you are really motivated to work. And that's what's worked for me.
And speaking about the pandemic, we're all living in extremely uncertain times, and we have a bunch of young entrepreneurs watching this today who've made it to this list by carrying through these tough times. But I'm sure they would still like to know, is there really a point of having, these long-term visions or 5-year plans at all? Or do you just plan on the go?
Well, you got to do both, obviously. You got to have some sort of longer-term notion, idea, plan, potential target, some number, some metrics, something. And then you got to focus on working for today, working for the week, working for the month, working for the quarter, right? You got to do both. So the long run is actually a series of interconnected short runs. Number one. Number two is, second, I'd like to say congratulations to all those who made it to this list. But you know what? I never made it to any list until much, much later. So the list you got to make it to. Are you a preferred brand, preferred product, preferred solution for your customers? Are you on your customers list? That's the most important thing, right? It's much more important than any other list. And I never won a business plan contest. I never entered a business plan contest. I was never in a 30 under 30 or 40 under 40. I never tried for anything. We just focused on our customers. And that's the advice I'd give you. So it's great achievement. Now focus on your customers.
The fact that unicorn is the buzzword right now, and you rightly said that one should take that with a pinch of salt. But I think that's what everyone wants to know. How do you become that? So is there like a mantra or like a shortcut or any sort of advice you have for our?
My advice is to build sustainable value. Your valuation in the long run will be an outcome of the value you built. In the short run, you can get a valuation, you can sell a promise to investors and you'll get a valuation if you sell a promise well. But if you don't live up to that promise, then after 3 years or 4 years or 5 years, you will perhaps lose that valuation. So focus more on building sustainable value. Valuation is a natural outcome of building sustainable value.
And often it's easy for founders to kind of get carried away with the big round of funding or, the unicorn status of being successful to an extent, How does one kind of stay grounded and focused on the long road ahead?
So listen, if you're talking to your customers all the time, right, they will keep you grounded because your customers give you honest feedback. Right? And an unhappy customer is a customer you should really learn from. Yeah. Because they will tell you how to fix the product, how to fix the service, why am I unhappy, what is wrong with it. So focus on meeting customers, talking to customers, and just listening very hard.
Just a general reminder to our class of 2021, kindly send across your questions. We will be addressing them towards the end of the session. Right, sir. And, like you spoke about, okay, this is all about the journey to a successful company. What after you become successful or that how do you keep this success going? And what should be the founder's focus area then?
I think a founder has to be a magnet for talent. And if you've got good, talented people in the company, they will set the agenda for you. You won't have to do much after that in terms of doing the thinking. You keep people aligned, but smart, bright people will go out and do it for you. So I think focus on getting the talent to the company and keeping it aligned and getting great people and empowering them and, sharing the wealth with them and sharing the credit with them.
Yeah.
And you'll be all right.
And what, according to you, are signs for a founder to look out for, once a business scales up, to suggest that it's time that he or she kind of takes a step back from the day-to-day operations and to bring in a professional CEO?
Well, look, most of the young founders are professionals themselves. They are usually professionally qualified. And so I'm not sure a professional CEO is always the answer.
Okay.
But I do believe, that look, you've got to let in a lot of people around you, and listen to them. So the one advice I would give, in addition to attracting talent, is listen a lot. Listen a lot. Seek to understand before trying to be understood.
Great. So I think those are all the questions that we have from our end. We have a couple of questions coming in from our listees. Right. The first one is from Shifali Vijay Vargia. She's the brand manager at Amul Cool, who's the winner of our advertising and marketing category. Her question for you is, in today's dynamic scenario, what steps should a professional take to start up while planning to leave their cushy job, considering the many ifs and buts involved?
I think you got to be clear about who you're serving and what is the unsolved problem you're solving and how will you solve it, right? If you're just aping an idea from the West, if you're copying somebody else's idea because he made it work, so I'll make it work, that's not good enough. You got to know your customer, know the unsolved problem, and try and solve it. And if you're focused on that, you will know what needs to be done. That's the first, and that's 80% of it. No clarity about the unsolved problem you're solving and for whom.
The next question is from Amandeep Panwar, who's from Bharat Rohan Airborne Innovations. It's a startup that has developed drone hyperspectral imaging technologies to identify crop threats for farmers. He's a winner for the agri-tech category. He has sent two questions. The first one is, what are the major challenges that you faced while building your team, especially the second layer of management?
So I think the challenge or the pitfall that we often face, especially if we don't have enough capital, is we compromise on the quality of talent. And I think that's a trap. I think the other thing is that we often face is that when we get in talent, we don't empower the talent enough. Because we are entrepreneurs, we want to be in control, we decide everything, and both these are traps.
The second question he sent is, while starting Info Edge, what was the biggest failure that you faced and how did you overcome it?
I think early on, when we launched Naukri, we were perhaps underinvested in technology. And the reason was simple. We didn't have a founder at the top table from the tech side, full time. And I think that led to the tech voice being underrepresented. And we did rudimentary technology and focused a lot on sales. Now that worked at that time. But when we realized that, listen, we are perhaps underinvesting in technology by about maybe the year 2000, 2001, 4 years after we launched Naukri, is when we really began to invest in technology. And our initial thumb rule was that, listen, any point in time, 10 to 15% of the employees of the company should be in tech. And we more or less maintained that, maybe even exceeded that. And today, I would say we sort of, within 2 years, we had made very rapid strides on the tech side. So, today's startups very often are started by people who are good at product and engineering, don't know sales. We were okay at product engineering, but we were really good at sales. We started the other way around, but now I think we're good at both. And that's working for us.
Nishita Baler Singh, who's the co-founder and CEO of Nexus Power, which is a startup that is building an EV future beyond lithium-ion batteries by using biomimicry to make biodegradable fast-charging batteries from crop residue. I wanted to understand as to why huge potential products which need capital to continue R&D, for example, battery tech companies, often end up struggling to raise investments. Is it because of lack of quick revenues or because investors don't want to take chances at this stage in their startup? What is it?
Well, it's both, obviously. See, I think the Indian very early stage, R&D type investment market has still to mature. Now, there are efforts going on in various IITs and various incubators by the government, and other organizations. But clearly more needs to be done. You're absolutely right. There's a gap here, and partly that's because many investors don't really understand that space very well, and therefore, if there's a company making a promise that this is what this technology can do if I develop it well, unless somebody really understands the person who's making that claim and say, is this person capable of doing it? And even if it does do it, will it work? And will it, create a new product, which is really good? Unless investors understand that and understand those risks and the technology, it's going to be hard for somebody to build a conviction. So, it's an unsolved problem. It needs to be solved. I don't have the answers right now.
Got it. And just one last thing, sir. If there's one advice you'd like to give our enterprising 30 under 30 class of 2021, what would it be?
Well, it touches upon what I said earlier. What I always tell young entrepreneurs is that the customer's money is better than the investor's money. The reason being that if you're getting the customer's money and you're getting it at a price higher than your cost, and you're getting it repeatedly from the same customer, it probably means you have a viable business as long as you can get enough customers. And if you're getting the customer's money, in this fashion, you will almost certainly get the investor's money, because investors love to invest behind businesses that are getting the customer's money. But the converse is not true. Just because you get the investor's money, it does not mean you will get the customer's money. Right? Because getting the investor's money is very often about making a good PowerPoint to a couple of young MBAs who are in an investing firm. Getting the customer's money is a lot harder, because the customer will not give you money a second time if the product did not work for him the first time, him or her. So therefore, I would say focus on the customer's money more than the investor's money.
Thank you so much, sir. This was a ridiculously and super insightful conversation with you. Thank you so much for your time, and have a great day.
Thank you for inviting me. Thank you so much. Bye-bye.
Thank you so much.
Forbes India 30 under 30, presented by Vivo.